talk about FICO scores. Now, you may be wondering what's a FICO score, so let me tell you. A FICO score is a 3-digit number that's assigned to adults to give each person a credit rating score. So this number is used to help lenders determine how likely you are to pay a loan back. So it does, and it will impact you financially if you have a lower FICO score. So basically, your FICO score affects how much you can borrow, how long to pay back the loan, and the interest rate. And you're like, well, what difference does it make? A loan is a loan. No. When you ask for a loan, these are the factors that is required. So how much money you can ask for a loan. So if you want a $5,000 used car or you want a $40,000 new car, right? There's a big difference between those two products. How long to pay back the loan? Do you can you get a 3-year loan? Does 7-year loan? What are the terms? And then the interest rate. Well, that's how much interest rate you pay to your lender, to the lender, for the money. So that interest rate, if you have a low FICO score because you have a lower credit rating, you're going to have a higher interest rate. $1,000 loan, do you want a 25% interest rate, or do you want a 7% interest rate, or do you want a 4% interest rate? Well, obviously you want the lower interest rate because that's the amount of money that you have to pay back the lender for letting them borrow the money, right? They need a fee. It makes the lenders, they can use it to make smarter, quicker decisions. It's also used to give faster and more fair access to credit. So ideally, it's supposed to be a standardized number based on your financial history. And so therefore, each person is supposed to have the number, and then therefore lenders can make a quicker decision on whether or not to give you money, how much money to give you, how long to let you pay that money back, and the interest rate. So this FICO score, so it's actually a whole combination of things here. It measures how long you've had credit. It measures how much credit you have. So do you have $10,000 credit available? Have you been approved for $100,000 worth of credit? It also measures how much of your available credit is being used. So they know, say you have $10,000 credit limit and you have a $2,000 balance, they know that percentage and that proportion as well. And they also know your payment history. Have you paid your bills by the due date every single month and paid them on time? So the good thing about a FICO score is that you are in control of it and you can influence your score. You influence your score by making sure that you are making your minimum payments on time or early every single due date. So if you are considered low risk, which basically means that you are more likely to pay your loan back on time, then you can literally save thousands of dollars in interest and fees. So if you have a lower FICO score, you are considered higher risk. So what you need to do is work on increasing your credit ratings. If your FICO score is less than 580, right now you are considered poor credit score. You are a risky borrower. So that can mean, as I mentioned before, several things. Maybe you haven't established enough credit to raise that score. If you just turned 18 and don't have any credit, this would be one reason why you have a lower score. On the opposite side, you could have been extended credit and not pay your bills. Not pay your bills on time, not pay the loan in full, missed payments as well, and therefore you would have a lower credit score as well. So the good thing though is part of some federal law is that you can have access to your credit reports once a month, annual credit reports through the U.S. government. To access that, you have to go through www.annualcreditreport.com. So www.annualcreditreport.com. Now, there are 3 companies that report FICO, their own credit rating and FICO score. The first one is called the First Credit Bureau is Experian.com. The other one is TransUnion, and you can go to transunion.com. Now the third one is Equifax, and that is Equifax.com. So once again, if you've got a low FICO score, you're a risky borrower. So you do need to take action steps to increase your FICO score. And if you have a high FICO score, especially anything over 800 is considered exceptional, you're going to get the best terms available from the different vendors and lenders that you are looking for. And as always, do your own research, find out your own information, and you don't have, if you are looking for a loan, whether it's a car loan, a mortgage, anything like that, any other loan, do your research and go to more than one person or more than one company to offer their services, because you may find that there's actually going to be a large interest rate difference. And a 1%, a 2% may not sound like a lot, but if you're talking a mortgage on a house and it's 2% difference over a 30-year loan period, that's a lot of interest at the end of the 30 years that you've paid. So that does make a huge difference as well. So I wish you best of luck. So get your find out what your FICO score is first. Let's start there. Let's look at your credit report and let's see where you can clean it up. So good luck and work on increasing and raising that FICO score number.